We are dipping into a new all-time trading high, and then we close below it. And for many technical analysts, you would see that dip into highs and then daily close below that previous high as having a being a potential failed breakout at highs. Now, as you can see from the longer term time frames, we're still in an uptrend. The VIX is still in a downtrend, but we're going to be looking at what levels exist that would create an environment where this rally could continue, and also how or what it would look like if it was going to fail, where we would confirm it being a potential double top here as we're going into our FOMC statement. The other thing that's really interesting is that the Federal Reserve, the FOMC statement that we're going into today, we were making a note here of 47.7. Let's look at what it is right now again as we're going into the open. It's fallen to 46.8. So the probability for a rate cut has just fallen by about 9 basis points here since the pre-market time frame. And Powell was recently subpoenaed for his decisions at the Federal Reserve on these renovations at the Federal Reserve. And, this is like, Trump and Powell, it's like two kids pushing each other on a playground. And I'm kind of curious today is to see if Powell, pushes back and, does something, maybe that isn't necessarily good for the economy or the Federal Reserve's mandate, but it could be justified based on the most recent economic data that, suggests that the inflation is still here and we haven't reached the 2% target. Could Powell push back while the market's at our all-time highs? It's certainly a possibility. Gap fill statistics for the day over the last 180 days is 76%, 78%. Now you'll notice, and this is over the last 30 days, in January specifically, the gap fill statistics have been falling. You can see those pink cells there. And the half gap fill still have a very strong edge, and we've been coming 1 or 2 ticks away from half gap fills over the last couple of days. But we've left, I believe it's now 5 unfilled gaps in this rally. And so it becomes very important that we continue to defend the extension long levels that we're inside of here and the VIX's extension short as we're going into our FOMC. And let's talk a little bit about that. The dollar it has a positive correlation right now, a negative correlation with the indices. And if the dollar is squeezing up into resistance, what are the indices doing? They're pulling back into extension long levels. So dollar squeezing into resistance, indices are pulling back into support. They're variations of extension long levels. If we're holding below the 97,217 and the dollar is weakening from those levels, the indices would continue to rally. Bank is still in longs. We'll see if that's true here at the open. The VIX is still inside of a halfway back short for the week. But even if we were to break through that halfway back short for the week, what's the larger halfway back short from our February contract highs to lows? It's all the way up here at the 1975s. So we're associating that extension with, we could trade the extensions and still be inside of the larger traditional. There's a possibility that could exist if there's a dollar weakness trade that goes along with it. The weaker parts of our market are the YM and the Russell, but NQ and the ES are essentially... This stream continues at eminiaddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.